Well, I'm delighted today to be speaking to Patrick Ryan, who's co-founder of Sire Capital Partners. We're going to talk about the new business that's been set up, as well as some of the latest trends from the real estate sector. Welcome, Patrick.
It's nice to be here, thank you.
So I'm looking forward to our conversation about the latest trends from the real estate sector. But first of all, this new business that you've set up, Sire Capital Partners, could you tell us a little bit more about it?
Indeed, yes, it's really exciting. Sam Faulkner and I have co-founded the business, and we're really looking forward to taking advantage of the market that we're coming into. The real estate sector is coming into a huge dislocation as we see it, and that really is going to throw up some opportunities for us.
And what problems is the new business seeking to address? Where do you see the gap in the market?
So essentially there's two sides to the business. One is a capital advisory side, and one is a brokerage side. The capital advisory side, we're essentially an outsourced capital raising function for developers and real estate owners. And on the brokerage side, we're representing investors looking for off-market opportunities that they really can't get to.
And you've got a long background in the sector. Perhaps you could tell us a little bit more about your background in real estate.
Yeah, so I started in the early 2000s. My first foray into real estate was having a mezz finance business that focused on funding residential developers in and around London. We ran that for about 7 years and until 2008. And then with the turn in the market, we changed and pivoted into long-term annuity income from commercial real estate.
And what was it that investors were prioritising at that time? I mean, coming out of the financial crisis, you know, there was a lot of variables there, wasn't it? I mean, what was it that people were looking for that you were trying to provide through those assets?
Exactly, yes. They were far more risk averse, obviously, after the crash, and they were looking for far more secure income, longer-term income. And we really found a niche in that space and in healthcare and social infrastructure, really. So that was long-term leases, sort of people getting their income, their rentals paid monthly over long terms. So that's what people were running towards security rather than the high returns. So.
And the investors that you were building relationships with throughout that time were sort of institutional in nature as well as family offices, and I mean, what sort of investors were looking at those kind of deals? At
that time, it started with high net worth, and then as we grew and grew portfolios, we started to move up the scale into family offices, and then as the business sort of grew and changed, then we were talking to institutions as well. And that's the interesting thing about, and you asked why I'm passionate and interested in the sector, is because you deal with people all the way through. It's a very people-focused business, real estate. But as you moved through the sectors of investors, the people and what they were looking for and their interests and their focus changed. So very diverse and very interesting.
But you proved your credentials to deliver, and that's the crucial point, isn't it? Working with partners over a long time.
Yes.
That only works out if you actually deliver what you promise, isn't it? So I guess
absolutely.
You burnish your credentials through these difficult times over a longer period with these investors.
Yeah, that's right. And we proved ourselves before 2008. Then we had to pivot quite sharply, and then we proved ourselves again. That we could identify opportunities for our investors for what they were looking for. And that's, as I come back to, is it's always about the people and the clients and trying to find solutions for them. And that's the reason I like the sector so much.
Okay, so perhaps you could just walk us through the business model with Sire Capital. There's a number of aspects to it. Perhaps you could just lay out some of the different offerings you're going to be providing.
Sure. Yeah, so as we evolve out of the old business into the launch of Sire Capital Partners, Sam and I are primarily going to be focusing on two things. One is a capital advisory part of the business, and that essentially, in sort of layman's terms, is on the sell side, the developers, real estate owners, etc. And then we have a brokerage business, which is on the buy side. With the capital advisory, it's all about being essentially an outsourced capital raising function for developers and real estate owners.
Because a developer might spot a site, they've got an opportunity, the banks aren't lending? I mean, what's the kind of example of...
it's a combination of things where, they may be, especially in this environment, struggling for finance, and, the way that, real estate is going to be financed going forward is going to be different from the last 10 years where we've had a, low cost of capital environment. So, they're going to have to be creative, and we're going to, provide those solutions and those clever ways to get through to the money, essentially.
I mean, given all the challenges in the economy, are you still encouraged by the deal flow that you see when you're talking to people? It's a lot of doom and gloom out there, but are people still seeing opportunities and trying to finance them however they can?
I mean, there is absolutely a short-term sort of sitting on the hands approach for at the moment, but we definitely see through the potential dislocation, distress in the market that is going to be coming through. There'll definitely be opportunities for people who are shrewd and know what they're doing. So it'll definitely be, the quality that comes through, like everything, because there's a lot of money still out there.
I mean, what's your view on how the central business districts will change, given we've had this massive shift in work from home, office occupancy is falling. There's necessarily going to be a repurposing of some of those assets. I mean, no one's got a crystal ball, but how do you see these things playing out?
I think there's going to be certain sectors that are going to stay strong. The sectors that have rental, good rental growth and rental sort of stability with them. PRS and student and those sort of sectors and logistics, will over the long term still have good strength to them. It's an interesting market that you mentioned, the sort of the core, the prime office. That's going to be it's super prime and the good stock is going to do well. But there is a lot of a lot of change and a lot of mix. So the nature of the way offices are, where people are looking for smaller spaces. It'll be, the shared office space. Those businesses are doing exceptionally well, and I think that trend is going to continue. It's those big office spaces may suffer.
And I guess this is the gap that developers will come in and spot new opportunities, create new concepts out of assets that are underperforming in that environment, isn't it, as things to settle down?
Absolutely, repurposing and moving things through. So, value add sort of opportunities. There's going to be the opportunities that come out of that, and then also where people are now coming into the stress in financing. There's opportunities there for them to either be helped on restructuring or from the buy side to source good opportunities.
Because
value.
When they were doing their calculations, they were on a lower interest rate environment. So now they're looking around for sources of financing to.
And I think we're in that a new world in that respect. I think everyone would agree. Interest rates are going to go out a bit more, and then they may stabilise. But I think going forward, they may settle on the new normal, and we may be in a period for an extended period of interest rates not going back to where they were. I think most people would accept that.
So just covering off, I mean, why a developer wouldn't actually have a salesman out raising capital for themselves for their projects? I mean, what's the logic of outsourcing this piece to a firm like yours?
It comes down to obviously cost. If you're going to have an in-house resource doing that function full time, that is going. That's obviously it's a cost, a direct cost for that resource. But also, it's if you either have that or you're having to do it yourself, that's an opportunity cost as well, where you could be out focusing on the thing that you're good at, of finding sites, looking at opportunities, rather than having to take your time and having to chasing around trying to find the money. Whereas that's what we're good at, and that's what we do.
And I guess by having multiple projects that you're working on at any one time, you've got more to talk about with your network.
Absolutely.
Rather than a developer with a single scheme. It might be hard to get the scale, to get the conversations going.
Oh, completely, yeah. I mean, as that's our focus, we have multiple sources of deals, talking to multiple, investors. So,
and how are you paid and incentivized on those deals? I mean, that's what it often boils down to, isn't it? Everyone wants capital, but what would it cost?
So we're totally commission based and on success, not on a retainer basis. We get mandated by the developer or the real estate owner, and then we work for them until we're successful.
So you're completely aligned. They're not paying you if they're not getting that capital in through the door.
Absolutely.
So what's the opportunity of launching this capital advisory aspect of your business right now?
The market is obviously going into a period of distress. So many owners and developers are coming into refinancing situations, and the banks are going to be starting to put pressure on them. So essentially we're looking at them and saying, we can help you with restructuring. We can bring in other sources of finance, a wider, more alternative sources, and we can even look at restructuring their properties. We have products that they could come in and get cheaper cost of capital and potentially even release cash from that.
So what are some of those alternative sources of finance? Are they in the family office space, but also debt funds? I mean, outside of the banks, what's the pool of capital?
I think there is going to be a really busy time for debt funds coming up. But also we are specifically working with a very large ground lease fund. And essentially they come in and buy the freehold asset from the owner. The owner takes a long leasehold, so essentially a virtual freehold. It's say 250 years, and the way that gets restructured, it can bring in a cheaper blended cost of capital because they can refinance against the long leasehold, and also there is a cash release opportunity as well. So the owner who is thinking that they're going into a position of distress, the way if you can restructure it like that, can actually come out doing really well.
Okay, terrific. And just looking on the other side, on the buy side of the business, you've got family offices seeking opportunities, you've got other high net worth investors. Tell us about the logic of that side of the service.
At the moment, there is a bit of malaise in that area at the moment, short term, because everyone's sitting back. They know 2023 is going to be a year of real opportunity.
Yeah.
And essentially with the mortgage rates that have gone up, just over the last few months, everything's happening quite quickly.
Yeah.
So the cracks are starting to appear, and so to speak, already.
There'll be forced sellers coming to the market in a way that there hasn't been so far, is it? Because interest rates have been so low.
And I think we're going through a period of, the buyers are sitting on their hands waiting for pricing to be established. Sellers are still holding on, but that's going to change clearly when the banks start to tighten up and move on people's situations.
And tell us about the off-market opportunity. I mean, why is that relevant in this piece, and how do you help people navigate assets that are notionally off-market?
The off-market market is large, and and the difficulty with it is it's very opaque. It has you need to really be on the ground, meeting people, meeting asset owners and developers, and investors and especially offshore investors don't have the understanding or don't have the the insight and really the time to get to the right people. And in terms of the value from our point of view, the asset owners are often represented by trusted advisors. We'd be talking to often I have conversations with lawyers and architects and surveyors, and so to get to the right people it's a layered process, and that takes time and focus and experience of the market.
And I guess with the lawyers, I mean, if you're an integral part in terms of finding the asset they might transact on, so if the lawyer, to do their job, to keep their client happy, they can't source this asset to transact on.
No, and I have great relationships with some lawyers who, you understand it's a win-win for everyone. If they're one of their clients is looking to sell an asset, or they're obviously going to benefit from that. So we have a good working relationship.
And on the buyer side here, I mean, I imagine the foreign investment aspect is large from perhaps the Middle East, Asia, Africa, US. I mean, there's lots of interest in the UK, given where, sterling, the devaluation, opportunistic buyers overseas. I mean, is the foreign investor an important part of the mix here for you in this buy side?
Yeah, absolutely. Yes, because they are a different. They're a different situation to the institutions completely.
Yeah.
Obviously, the institutions have a lot of money, a lot of but they have they tend to have very focused, strict mandates what they're looking for. The overseas investors, if you're dealing with family offices or high net worth, it's more flexible of what they may be looking for, and you can really have a bit more of a nuanced conversation with them about the asset and really understand, get into what they're really trying to achieve and supply real value add to them.
And because they're not on the ground, and they might be the other side of the world, and they obviously know the market or have an appreciation for the market, sure. But actually being here physically to smooth over that transaction, to find the asset in the first place, I guess is an integral part of what you might do with partners overseas.
Oh, completely. Yeah. Yes, we that's the value add component. We it's being the feet on the ground essentially for them, and finding those right deals.
And obviously these foreign investors, say in the Gulf, out in Asia, they are like prize assets, if you like, for the real estate industry here. Yes. You're a smaller player, a new entrant into this market, if you like. But how do you contrast what you're doing with the bigger brand names that those clients might deal with? What do you do differently?
Because we're small, we're nimble, and we can really give a client, individual client focus. When they get someone at Sire Capital Partners, they're talking to the partners. So we can give them our experience, obviously all our knowledge. We're able to dive deep into our local contacts. And like I said, just be nimble and take the time and the attention for the client. And that, it comes back to my original point. That's why I'm in this game.
One of the challenges of being a smaller business is actually staying in the game and overcoming the natural hurdles that come thrown at you by the market, the economy, and everything else that's going on. I mean,
absolutely.
When we were talking about 2008, surviving the crash. I mean, what have you learned in your career over the last 20 years? And what are the challenges you faced and things you've overcome?
Yeah, exactly. I mean, that was a big one, obviously, for a lot of us. And I think the lesson there was, it's important to be able to adjust, to pivot, to and really look and drill down on opportunities that are right in front of you at the time. No matter what they are, you can change your focus and be resilient that way, because that's how you survive. And like you say, when you're a small business, you have to be nimble to survive and agile. So that's the thing. We took a huge shift from being a mezz finance business in residential across to and focusing on annuity income in primarily social infrastructure. So it was a big shift, but it didn't really matter because the same principles were there, and that was to find the client what they wanted and focus on that. Be a very, very client focused business.
And in that period after 2008, I mean, a lot of investors, it was the hunt for yield was like the thing with interest rates on the floor. People wanted that yield pickup.
Absolutely.
We're obviously moving into different times now with rates rising. What you needed to deliver then was different to what you'll deliver in today's environment, isn't it? So
sure.
How do you see the evolution of that then in terms of the market as we're going into 2023?
I don't think we're going to be in as long a trench as we were back then. So I think there's still the far more dynamic opportunities will come through. So people are still going to be looking for opportunities, good returns, and I think we won't have that that long malaise where people are just really just saying, well, yeah, we just want safe yield, and that's what we obviously back then we found. And that's what we targeted. Now, we will be looking at opportunistic situations. A lot of it's going to be around the restructuring and of people's situations. I think that's a big focus for us next year, is working with those asset owners and how we can, work within the increasing interest rate environment to really restructure their situation.
And where do you think the traditional financing options are falling short?
The traditional banks are, they're conservative. They will still be lending, obviously, but I see that they're going to be lending at a much lower loan to value, not up the risk curve. So I see the opportunities for alternative finance and debt funds, etc. So up that risk curve. So there is a much broader market that's established in the last few years within that higher risk curve, and I can see there's going to be a lot of activity in there as the traditional banks pull back.
And the family office sector is an appealing one as a partner in real estate, but they're also not necessarily the easiest organisations to try and deal with. I mean, what have you learnt dealing with the family office sector in your career in real estate?
Yeah, you're right. I mean, it's a very good point. I think it's getting to the right people within the family office, making sure that there is a real want to transact, and trying to take your time to understand that, and really getting through trusted advisors has always been very important. A way to sort of get in and get to the right people within them.
So you can leverage your own network of contacts that you've built in the family office sector, but also work in partnership very closely with other professionals.
Yeah, exactly.
And in terms of the PCD club audience, we've got a lot of different types of professionals in the UK and around the world. I mean, what kind of professionals are you most interested in engaging with on this business?
Yeah, absolutely. I think specifically from the PCD point of view, lawyers and trustees and advisors really are such important gatekeepers to the asset owners and investors that we're trying to get in touch with. So I think from that network point of view, they're the ones that we're really looking to talk to.
Because I guess trustees might be sat on a structure with UK real estate in it from offshore, just needing a view on, are they in the right assets, or on the financing questions? There's a lot of complexity coming down the track, aren't there, which they need input on.
Yes, absolutely. I've obviously been to a few of your dinners before, and certainly I've got a lot of benefit out of, talking to those types of organisations.
Terrific. Well, look, good to talk to you today, Patrick. Look forward to sharing this interview.
Lovely. Thank you, David.